From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli, letting you get caught up on what we saw across the markets today. Look, it was a pretty good start to the day's trade, but then we started to see a little bit of a wobble, and it looks like we're down by about 0.2% on the ASX 200 as we head into match off 8,071 points. Certainly a lot of good gains coming through from the likes of Woodside and Worley, who reported today, BHP positive as well. But a little bit of weakness coming through from some of the financial players, in particular, some of those smaller players as well, like Zip, which really had a bad day. So it really was a day of an earnings push and pull as we really start to look at the outlook from these companies for full year 25. As I mentioned, Woodside and Worley very much well respected by the market, BHP as well, looking quite good after its numbers. Potentially an end to the iron ore boom. One analyst noted that Mike Henry pointed to iron ore very fewer times than normal and spoke a lot more about copper. We spoke to the CFO of BHP earlier, and there was some strong moves coming through in terms of their outlook there. The other big story that we're following today in terms of news and what's moving potential markets as well is this migration crackdown. Now, I do want to get these figures right, so just going to look at my screen for a moment while I have a look at what the government has announced. They have said that they will limit the enrolment number of new international students at 270,000 for 2025. So looking to rein in record migration that many are blaming for a spike in rental prices. This follows rental prices, I should say. This follows a raft of actions since last year to end the COVID era concessions for foreign students and workers in Australia that helped businesses recruit staff locally, while strict border controls kept overseas workers out. And an eye on CPI. We've got the monthly July figure coming through tomorrow. Not as important, of course, as the quarterly figure, but nevertheless one that the RBA will be looking at in a week or fortnight, I should say, where there's been very little on the domestic data front. But of course, we have been focused very much on what's been happening at Jackson Hole, Wyoming. Let's have a quick look at what we're seeing in terms of some of the sector moves as well, getting you caught up on those energy stocks. Woodside Energy looking very good after its numbers, up 4.3%. Santos up 2.2%, and Beach Energy also looking good. And look at Strike Energy up by an impressive 20%. Looking at the miners there, I mentioned BHP coming through with its numbers. Fortescue reporting later in the week, up by 1.8%. South 32 also reports later in the week too. The tech players, we had Zip very much hit hard today and dragging down some of the others. Xero off by about 2%. NextDC down 1.5%. And I forgot to mention when we're talking about the retailers push and pull, but our guest Grady Wolf, who's joining me shortly, will talk about this. Lovisa, now this is sort of one of those market darlings, if you like, but shares down 11.5% as it saw its same store sales miss expectations, I believe, but Grady will know more detail about that. We'll get to that in a minute. Let's have a quick look at some of the top stories. Index heavy giant BHP higher, slightly better than expected, $13.7 billion underlying profit. The supermarket giant Coles rising after reporting stronger full year net profit, taking its total dividend to 68 cents fully franked. Worley jumping thanks to its higher profit. Woodside Energy as well, a jump of 11%. We'll be talking to Meg O'Neill tomorrow. And the Mexican-themed fast food restaurant chain Guzman y Gomez reporting a full-year loss of $13.7 million. But when you adjust for the costs associated with GYG's IPO, profit actually rose, so pro-forma profit up more than 94% to $5.7 million. Let's get to our guest, Grady Wolf from Bell Direct, joining us on a very busy earnings day. Let's start with Coles, Grady, because we know that there has been a lot of concern about the outlook and cost of living pressures, but it looks like the market liked Coles' numbers.
Yeah, Coles obviously outperformed today, and it's the first of both of our supermarket giants. Obviously, it's a duopoly in that space in Australia for the listed companies front. But Coles, actually, the results came out pretty well with a $1.1 billion profit, and that was driven by online sales. So I don't know about every Aussie out there, but apparently we're online shopping with the high pressure of living and not enough time in the day. So a lot of Aussies are opting for the online sales versus in-store sales. And that may also be due to online sales like different promotional sales that are coming through as well to entice people to shop online. Now, the thing to note about Coles was that their CapEx was actually higher in FY24, but that's expected to come down in FY25. So that's a positive note that investors could be responding to today as well. The outlook as well, and one of the interesting parts that caught my eye today was Coles 360, because I hadn't heard of that before. So looking through the results, it's actually an advertising stream to the company that's bringing in revenue and income. So they're utilizing their massive database and their massive exposure to eyeballs every day to start making money out of that. So Coles 360 was another driver of income today. It's increasing income for Coles overall. We're also going to see, obviously, Woolworths out later this week. So I think we'll get more of a comparison and more of an outlook of what the Aussie spending front is and what the inflationary pressures are for our supermarket giants moving forward once both the results are out, because after that we can compare them both and say, okay, well, Coles has had increased sales for the first start of FY25, but Woolworths may not have. I'm not sure. We got to wait and see what Woolies comes out with. But for the first 8 trading weeks or 7 trading weeks of FY25, Coles has had an increase for Coles, but for their Coles liquor, it's actually gone down. So maybe Australians are cutting for summer. I'm not sure.
Well, maybe we're being more healthy as well. But speaking of liquor, it was interesting because Endeavour Group was out yesterday and they talked about the cost of living pressures driving people to Dan Murphy. So it's really playing into that theme as well.
It really is, but Endeavour wasn't as welcomed as Coles' results today in the market. So Endeavour, their results actually weren't too bad. Their group sales rose 3.6%, group operating EBIT up 4.9%. Their group net profit after tax actually fell 3.2%, so that's likely what investors were alluding to and responding to out there. And the full year dividend was flat at 21.8 cents. Now, the thing about the Endeavour results was that their profit slide was due to financing costs as well. And the final dividend, well, we've had softer consumer spend in the markets that led to the flat dividend in there for Endeavour Group. But what the other impact was that a few of the market have seen, and what we've noticed out there is that the Victorian government have adjusted their trading hours for different hotels and gambling and gaming forums, which obviously plays into Endeavour's outlook. So that's going to impact Endeavour's Melbourne operations across the board for their hotels. So that's one area to be wary of next year.
Let's talk about Adore Beauty. I mentioned that maybe you had some insight into Lovisa, but this is in the same theme. Well, maybe we can tie them in together. Adore Beauty and Lovisa, because Lovisa got hit really hard today.
Yeah, Lovisa was likely. I was looking at the results and they actually weren't too bad. They were kind of in line with what analysts were expecting. And so it's probably a likelihood of profit taking because Lovisa has been that market darling, as you mentioned earlier, for so long. And investors are likely just taking some profits ahead of the new financial year and repositioning because it has, as I said, been on a run. It's a market darling and it's a very, very well-run company. So I know that out there today, they've been expanding into different online marketplaces like ASOS, the Iconics. So the fact that they're expanding into those, as well as they've opened 10 new stores, this is Lovisa, by the way, but they've opened 10 new stores in the first 8 weeks of FY25. It just goes to show the global strength of this company. So I am still a fan of Lovisa. It's done very well. The results were great. The profit was up. They have the dividend obviously being paid out. So yeah, it's not the results weren't as bad as the market was responded to today. So it could just be some profit taking, but I will have to look into that with finer detail a little bit after this show. But with Adore Beauty, that was obviously an interesting one, and I think the consensus of the retailers this reporting season has been a surprise to the upside because Adore Beauty has definitely played into that. Now, a lot of people questioned their acquisition I think it was in July of the IKOU. I don't know how to say that. It's IKOU brand. To get their physical store presence. So everyone said, physical stores dying, not sure that's the right strategic move, but it has paid off for Adore Beauty with their physical presence actually bringing in a lot of the sales and really driving their outlook next year. So they had active customers, reached a record of 814,000, and also customer retention hit a record of 64.7%. So customers continue to go back, and when with Adore Beauty, you're playing against massive global powerhouses like Mecca, Sephora, all of those kind of brands. So it's actually done really, really well. And their revenue rose, profit after tax rose. That was up 487% on FY23. So again, they've done an incredible job in FY24, and the outlook is looking very strong as well, with the CEO saying that they're expecting growth to continue into FY25.
And finally, some people like me who got in at the IPO might be seeing some money coming back at some point. Grady, thank you as always. Good to have you with us. Grady Wolf from Bell Direct going through some of the reporting season highlights. We mentioned Zip though going the other way. That was actually the stock of the day. Kai Chen from MPC Markets and Francesco Destratus from Ord Minnett joined Kylie today.
But in the last year or so, they've restructured the business and it's actually doing fairly well. From the headline figures, we are seeing that it's their first year in profit, so they've actually done really well. The EPS beat analyst expectations. But I think the devil is in the detail, and basically the stock sold off about 8% on the open. And the reason why was because, they have a ANZ business as well as a US business. The US business is actually doing fairly well. The transaction volume is going up. But what we've seen is that the customer growth is actually slowing.
Where the price is at the moment, it's probably, looking like in the short term being fairly valued. So a little bit of weakness in the share price is probably not massive right over the last 12 months. Our analyst has got a buy recommendation on it, but that was prior to the announcement. So they'll probably be looking at the result.
All right, let's have a look at the leaders on this Tuesday. We saw Nanosonics, which was also out with its numbers, have a very solid session, up by 23%. Strike Energy up 20%. IDP Education, this is interesting, rising 5.7%. The government, of course, announcing a student migration visa crackdown for 2025. Woodside Energy, after its earnings, up 4.3%, and Kelsian Group up by 3.7%. To the downside today, we saw weakness in the likes of Zip, which was down 8%. Also Johns Lyng. Now, I did speak to the CEO. You can find that interview online. They're really trying to build on their strategy growth here. Lavisa, Grady was talking about potentially just being punished there because there wasn't too much when he went through it with a fine-tooth comb to be thinking that it would be sold off by 11.5% today. Smart Group down 7.4% and Deterra down by 6.1%. Let's have a look at what we saw in the small end of town, kicking it off with Rimfire Pacific, which had an interesting, very strong day, up 26%. Strike Energy, Playside, Aspire Mining, Coast Entertainment also looking good. On the downside, we saw Electro Optic Systems down by 10%. Hello World Travel, I saw Philip Pepe from Shaw & Partners have a note out on that earlier after its results, so down by about 9%. Actinogen Medical down 9% as well. All right, let's have a look at what we are looking out for tonight. Home prices for the US for June, also the Richmond Manufacturing Index for August, and the US Conference Board Consumer Confidence data for August. And as I mentioned before, it's been really light on the last fortnight or so in terms of data here, but tomorrow we do get the monthly Consumer Price Index at 11:30. We're actually going to be talking to St George after that, so you can catch that around 11:40 a.m. Eastern. Construction work done as well, which is always an interesting piece in terms of how the overall economy is faring. And a big earnings day. We had Coles today. Tomorrow we get Woolies. We get the likes of Fortescue. We get Nine Entertainment. I know Karoon is reporting tomorrow as well. Wiser. And worth noting, we are going to bring you a number of CEO interviews, including some of those you see on your screen. The likes of Karoon will be talking to us, Nine Entertainment, Neuron Pharmaceuticals, Wiser. So keep it on ausbiz. We get all the CEOs, maybe not all of them, but a fair bit. All right, let's have a quick look at where the market finished the day's trade. It started off strong, but we've actually finished the day lower. I just want to get you a quick read on where the ASX 200 is tracking as we round out the day. Down 13 points or 0.2%, 8,071 points. And interestingly, Johns Lyng and Lavisa were the two biggest laggards today. But another few very busy days on the reporting season calendar. As I mentioned, we are getting a lot of the executives speak to us. You can catch up online, ausbiz.com.au. You can also join us live from 9:45 a.m. Eastern tomorrow. We'll see you then.